De-dollarization once seemed like a joke, but no one is laughing now. At last week's 16th annual BRICS summit, leaders discussed bold plans to cut the dollar's reign. Imagine a world where the dollar is no longer the dominant currency. How would that affect your investments? Here's what happened. Before we begin, remember to like this video and subscribe for more economic updates. This year's gathering in Russia zeroed in on initiatives aimed at helping BRICS nations sidestep the US dollar. This isn't just economic talk, it's a potential shift in power dynamics. In a joint statement issued on October 23rd during the summit, BRICS leaders urged member nations to collaborate on developing mechanisms to boost trade in precious metals. The following day, Russia's Ministry of Finance announced discussions with other member nations to create a proprietary BRICS precious metals exchange. The Russian finance minister emphasized the mechanism will include the creation of instruments for price indicators for metals, standards for the production and trade of bullion, accreditation of market participants, clearing and auditing within the BRICS countries, and the participating countries will have a reliable way of stable exchange trading within the association. According to a report from Reuters, the BRICS Precious Metals Exchange would rival Western trading platforms, such as the London Metal Exchange, and would protect trade from sanctions imposed by the West on BRICS members Russia and Iran. Here's what's worrisome. There are several reasons why the BRICS nations are poised for success in developing this exchange. What happens if this exchange becomes reality? How will this reshape global trade? All BRICS member nations have been increasing their gold reserves at a faster rate than the rest of the world, now collectively holding over 20% of global gold reserves. Russia alone controls more than 8%. Furthermore, China and Russia are the world's largest gold-producing nations. One of Russia's biggest companies, Nornickel, leads in palladium production, with a share exceeding 40% of total global output. The importance of gold as an alternative medium of exchange has been evident since Russia's invasion of Ukraine over 2.5 years ago, which led to roughly half of its foreign exchange reserves being frozen by the West. Professor Robert Huish of Dalhousie University notes that despite facing 16,000 individual sanctions, Russia's economy grew by 3.6% last year and is projected to grow by another 2.6% this year. The key factor? Gold. Billions upon billions of dollars of Russian gold is being freely traded at top dollar, while avoiding every one of those 16,000 sanctions. Records show that sanctioned nations have successfully settled transactions directly with physical metal in recent years. A fully functioning metals exchange, controlled by nations at odds with the West, could change the game. Think about it. This could challenge the very foundation of our current financial system. Although some analysts claim de-dollarization is mostly a myth, the data tells a different story. Research indicates that the dollar share of global reserves has dropped from about 71% at the start of the millennium to roughly 58% today. As the dollar share declines, gold share of reserves is on the rise. I'm not surprised by the assessment from the world's central banks. They expect the dollar share of reserves to continue to shrink while gold's percentage continues to rise. Look at what's happening in the world today. Are you surprised? The World Gold Council's 2024 Central Bank Gold Reserves Survey reveals that most central banks believe the dollar's share of reserves will keep declining, while gold's share is expected to rise over the next 5 years. We do know that de-dollarization is real and is neither a joke nor a laughing matter. We don't know how fast it will happen. But what's truly significant is what this concept reveals about the future of the monetary system. How prepared are you for what may happen? Until next time.